Most people think the silver crash you just saw was random or just bad timing. But what if I told you this drop was not an accident at all? What if this crash was carefully designed to scare you out right before something much bigger happens? Because once you see the evidence, you will never look at silver the same way again. Just a few days ago, silver was holding strong. Sentiment was turning bullish. Retail investors were getting confident. And suddenly, within hours, the price slammed down hard. No warning, no real news, just panic. And that's exactly how traps are set. Before we go deeper, make sure you like this video and subscribe to the channel. Here on USA Trending News, we break down what mainstream media ignores, and this helps the channel reach more people who need to hear the truth. Now here's where things get interesting. If this was a real market crash, we would have seen massive selling across physical silver. But that didn't happen. Coin shops stayed tight. Premiums didn't collapse. In some places, physical silver actually became harder to find. That's your first red flag. The paper price fell fast. But real silver didn't flood the market. That tells us the selling pressure was not coming from regular investors. It was coming from paper contracts, massive sell orders dumped in thin trading hours. This tactic isn't new. It's been used over and over again. Hit the price suddenly. Trigger stop losses, create fear, shake out weak hands. And when retail panics, the smart money steps in quietly. Look at the timing. The drop happened when liquidity was low. That makes price moves look bigger than they really are. If someone wanted the best price, they wouldn't sell like that. But if someone wanted fear, this is exactly how you do it. Ask yourself one simple question. Who benefits from this crash? Not miners, not long-term holders, not industrial buyers who actually need silver. The only winners are those who can buy cheaper after everyone else is scared away. And here's the part most people miss. Silver demand is not slowing down. It's accelerating. Solar panels, electric vehicles, military tech, AI hardware, all of it needs silver. And there are no easy substitutes. Supply, on the other hand, is tight. Mines are struggling. Grades are lower. New discoveries are rare. You can't just flip a switch and produce more silver. So when price drops, while fundamentals stay strong, that's not weakness. That's a setup. History shows this clearly. Every major silver breakout was preceded by a violent shakeout, a move designed to break confidence right before the real run begins. That's why calling this a crash is misleading. This was a snare, a psychological trap. If you sold in fear, you played the role they needed you to play. If you stayed calm, you're already ahead of most people. This doesn't mean price can't move lower short term, but it does mean the long-term story has not changed. In fact, it's getting stronger. The real danger is not volatility. The real danger is being shaken out before the move everyone talks about after it happens. That's why we cover stories like this on USA Trending News, not to hype, but to help you see the pattern behind the noise. As we get closer to the end, I want to hear from you. Do you think this silver crash was manipulation or just normal market action? Drop your opinion in the comments. I read every single one. And if you found value here, share this video with someone who's confused about what just happened. The more people who understand the game, the harder it is to play it. Stay sharp, stay patient, and don't fall for the trap. Most people believe what they just saw in silver was a normal market drop, a quick correction, just another bad day. But what if this wasn't a crash at all? What if this sudden move was carefully designed, not to reflect reality, but to control emotions? Because when you slow down and look at the evidence, something doesn't add up. And once you notice it, you can't unsee it. Silver didn't fall slowly. It didn't drift lower over days. It was slammed, fast and hard, at a moment when confidence was building. That kind of move isn't about price discovery, it's about fear. Before we go any further, take a second to like this video and subscribe. Here on USA Trending News, we focus on what's really happening behind the headlines, and your support helps this message reach more people. Now let's talk about what really matters. If this was a genuine silver collapse, we would have seen one clear sign: physical silver flooding the market. But that didn't happen. Dealers didn't panic, premiums didn't crash. In many places, supply stayed tight. That's not how real crashes behave. The paper price fell, but physical silver barely reacted. And that gap tells us a lot. This wasn't millions of investors changing their minds. This was paper selling, large blocks of contracts dumped quickly during low liquidity hours when the market is most vulnerable. That's your second red flag. When someone truly wants to sell, they spread it out to get the best price. They don't smash the market. But when someone wants panic, they do exactly this. And panic is powerful. Stop losses get triggered. Weak hands sell. Social media fills with fear. And suddenly, the narrative changes from silver is breaking out to silver is crashing. But here's the uncomfortable truth. Nothing fundamental actually changed. Silver demand didn't disappear overnight. Solar energy still needs it. Electric vehicles still need it. AI servers, defense systems, and electronics still need it. Industrial demand is locked in. On the supply side, things are even tighter. Mines are producing less high-grade ore. Costs are rising. New projects take years, not months, to come online. You can't fix a silver shortage with a price smash, so ask yourself, who benefits from this move? Not everyday investors, not manufacturers who rely on stable supply, not miners struggling with margins. The real winners are those with deep pockets, patience, and access. The ones who wait for fear, then buy quietly. And this is where history matters. Every major silver run has followed the same script. Confidence builds. Price starts to rise. Then comes a violent shakeout designed to break belief. Most people don't lose money because they're wrong. They lose because they get scared at the wrong time. This drop wasn't random, it was psychological. That doesn't mean price can't move around in the short term. Markets are volatile, but volatility does not equal weakness. In fact, forced sell-offs often mark turning points, not endings. That's why calling this a silver crash misses the bigger picture. This was a snare, a test of patience, a moment designed to separate emotion from conviction. And that's exactly why we talk about this here on USA Trending News, to help you recognize patterns before the crowd does. Now I want to hear from you. Do you believe this silver move was manipulation, or do you think it was just normal market behavior? Drop your thoughts in the comments. Your opinion matters, and these discussions help others see different perspectives. And if this video helped you understand what just happened, share it with someone who might be confused or worried right now. Fear spreads fast, but clarity spreads faster. Stay informed, stay calm, and don't let a trap decide your future.